Hi, Melissa Bill, and welcome to the Business Roundup, where we meet the movers and shakers in the business world. Today, joining me is Jess Ward. She is the Senior Director of State Affairs for the National Taxpayers Union. Thank you so much for joining us today.
Yeah, thanks for having me, Melissa. It's great to be here.
So this is something that probably a lot of people don't know what NTU is. Now, can you give a little bit of background of what you do and how you got started with NTU?
NTU is the National Taxpayers Union, and they are a nonprofit entity that is essentially we bill ourselves as the taxpayers' lobbyists. So looking out for taxpayer policy and how it impacts business and the taxpayer specifically, and always advocating that the policies that government officials or elected officials pass through legislation are friendly to the taxpayer as opposed to something that's negative or harmful. I started at NTU. Let's see, I've been there for 5 years now, and prior to that, I worked in the Wisconsin State Legislature as a chief of staff. And then, following my experience in chief of staff as a chief of staff, I ran a United States Senate campaign. I have a little bit of a unique path into politics and this world, in that I got started in law enforcement and was prior military, and opened up a few small businesses in Wisconsin, and that sort of lit a fire under me to become involved in government a little bit more than I previously had been. And so now I am in a full-time position for the National Taxpayers Union, advocating on behalf of taxpayers.
And you mentioned before we got on the call that being a business owner, you kind of saw firsthand how some of these things were like affecting businesses.
Yeah. Um, Anytime I hear an elected official say, "Oh, this is going to help small businesses," my red flags kind of go up, because is it really, or is it the messaging that might be helping the elected official? And I always want to dig into that a little bit to see if that policy actually would benefit businesses across the board, and the consumer who's spending money at those businesses. That has always been of interest to me, especially owning three small businesses, and I'm pretty passionate about it. And yeah.
And a lot of times these things, people sometimes don't read like the small print, or either they just kind of see something, they go off of what they're reading and what they're being told. They don't really know the background behind it, and then they just kind of, okay, this looks good. I'm going to go ahead and vote for it, or want it to move ahead. Now, one of those things is the price controls on interchange fees. Now, this looks good on paper. Like, some people are like, okay, this is great, but there's some things that you say are not so great, and it would definitely negatively impact consumers and businesses.
Yeah, and it does sound good. And I think, sometimes we have to remember that elected officials and legislators, they can't be experts on everything. And it's our job, as the consumer, or, my job as an employee for NTU or as a business owner, to inform the legislator what this actually means, and who would actually benefit from it and who would be harmed from it. And, you brought up interchange fees, which is a swipe fee. And I'm not sure if your listeners know what an interchange fee is. And I think that's part of where a lot of policy gets lost, is it can be so wonky and so complicated that you just read the top line, and the top line sounds great. It's, this is going to save small businesses money. We are going to put a cap on fees, and, everyone is going to be the beneficiary of this. And that's not what happens. So an interchange fee is a fee that when you that merchants, so in other words, the business owner, the business accepting the credit card, is going to pay to the customer's credit or debit card, just for it's a fee for swiping that transaction. So in other words, if you go in and you buy, and that percentage is usually 1 to 3%. If you go in and you buy a product that is $10, and let's say the interchange fee for using that particular card, Visa, MasterCard, American Express, whatever it is 2%. That means the card holder, so Visa or MasterCard, would receive 20 cents from a $10 purchase if it's 2%. So every time you use that card, there is generally an interchange fee that is associated with completing the transaction, that goes from the consumer or the merchant's bank from, and that is taken from, I'm sorry, even I'm like, even it's very, very complicated. So yes, there is then a fee essentially that the merchant is paying to facilitate the transaction. And that small business is paying that fee, and a lot of times is also passed on to the consumer. So what's happening in Texas right now is a bill has been introduced that would cap those fees. So, in other words, they would say MasterCard, Visa, you are only allowed to charge this percentage of a fee. No, no, it can't be any higher. It can't be on sales tax, and it can't be on tips. And that sounds great. I mean, even when you just say it, you're like, oh, that sounds nice. They, Visa, MasterCard can't charge higher than, let's say, the percentage in the particular legislation was 1.5%. The problem with that is those fees go towards a myriad of other things that make it the transaction possible. If we cap those fees, what happens is you start to see other benefits eliminated. And that's what we saw. So this particular course of action was taken in the Durbin Amendment. I think everybody kind of remembers that in 2009 when we had the big bill. They did it to debit cards, and what we saw is there were no more benefits for cardholders. They got rid of free checking. They eliminated, all these perks that you had for debit cards. It was, it, and then the idea was the dollars were supposed to go back to the consumer. Well, they didn't, because what happens is they cap those fees on debit cards, and most businesses said, well, we're just going to keep this additional profit. We're not going to pass it along to the consumer, which is probably normal behavior for a business to do, that they would keep that additional profit as opposed to passing it along to the consumer. So we have learned this lesson before in the Durbin Amendment, and I'm not sure why we are so hell bent on learning it over again. So
And this is something now, when are they looking, like when would this go for, is it in legislation right now?
it is. It fortunately has not moved out of the Business and Commerce Committee, both on the Senate and the House side. So we're thinking positive in this, and that there are some legislators who are finally understanding that this is not beneficial. The industry that is pushing it is big box stores, because they run such a significant amount of transactions and have attorneys that can negotiate these percentages with credit card companies, merchants, banks, etc. They probably would see some savings. The average small business would not. Point of sale systems are also very complicated. Right now, a point of sale system. So if I own 3 hair salons, and so you can't separate transactions like that. When I run your card, let's say you come in, you have a service done, you run a card, and my point of sale system doesn't have the ability to separate that one transaction into 3 different ones. So what's going to happen is these point of sale systems, they are going to have to start to comply with these new laws. Well, what happens then? They start charging Jess more money for a point of sale system that is far more complicated than what existed before. So, not to mention, a lot of businesses rely very heavily on the rewards they get. If they spend a certain amount of dollars, they get, you have Discover gets cash back, or if you travel a lot for your business, you have American Express that gives you all these miles and all of these perks. We're going to see all of those go away. And this is going to actually result in an increase for small businesses who have already built the cost of transactions and credit card transactions into what they charge. It's also, we're if businesses don't like swipe fees, or they would want to have an alternative, I mean, cash is still is still a form of payment. You can, if businesses don't want to accept particular credit cards because swipe fees are maybe higher than they're willing to pay, they don't have to. They have the choice to accept other forms of payment other than, MasterCard, Visa, or American Express.
I've seen that where it's when you don't spend a certain amount. Like in some
Mm-hmm.
convenience stores, if you don't spend up to 10, like more than $10, then
Mm-hmm.
they charge you a fee actually to use it.
Mm-hmm.
But you can use the debit, but you're gonna have, or whatever, the credit, but you're gonna have to pay a
Right.
fee.
Yeah.
And
Yeah.
that makes
It just it's not an efficient way, and it's also frustrating because if elected officials and the government truly wanted to address the cost to businesses, then let's talk about the franchise tax. Let's talk about, I mean, not in Texas, y'all don't have an income tax, but a lot of states do. Let's talk about reforming unemployment insurance. You know, businesses play or pay premiums on those as well. There are so many other things that can be done that the government can do to make the climate more business friendly, other than pointing the finger at the financial industry and saying that's a big bad guy and they're a bad actor. And it's, sometimes we need elected officials and we need government to take a look in the mirror and say, what can I do to help small businesses and the taxpayer?
right, to get off kind of off of their back, so to say, and let them grow and not be so. I know they were pointing out on a national level, it was the overregulation and that really was hurting businesses. What are some of these other things that you see, across the board that you were with NTU that you're working on for businesses, tax wise and other?
Yeah, so following the pandemic, there are two sort of divisions at NTU, although we all work hand in hand. There's NTU and NTUF, and NTUF, the foundation, does a lot of our policy side of things. And after the pandemic, and taking a look at the fraud, waste, abuse that happened in unemployment systems, we decided we were going to put together a pretty thorough deep dive into unemployment. Benefits as well as payroll taxes. And payroll taxes are just a significant burden. And obviously, with FICA, it's a tough beast to tackle when we're talking about Social Security or we're talking about Medicare. But states can do something proactively to help with UI, and businesses, every time someone is laid off or fired or um, it's almost functions as an insurance premium benefit. I mean, that's what it is. Businesses pay into a large pot of money. It works like purchasing insurance, and then every time you need to tap into that as a business, that premium increases. Well, what can we do to make those more stable? And I think COVID really shined a significant light on the problems in our UI systems. And so we sat down at NTU and we put together a payroll tax toolkit primarily focused on what we can do with UI benefits, and in looking at how states do it differently, it seemed to me that the best model was to index UI benefits. So by that I mean there would be economic indicators that would uh, dictate how many weeks of unemployment insurance you got. So for instance, in Texas, you get 26 weeks of unemployment, and that is indexed based on wage. So if you are a lower wage employer or higher wage, they determine what your weekly benefit is based on your wages. There needs to be another index measure that's included in that, and we've seen a few states do it: Florida, Idaho, North Carolina. I'm certain I'm missing a few. There's a handful of them that are indexing what you would receive for unemployment benefits based on the unemployment rate. So if jobs are really plentiful in Texas and the unemployment rate is at 3.5%, there's really no reason why someone should be sitting at home for 26 weeks if there are a multitude of job opportunities out there. And the same goes for if the unemployment rate is at 7, 8, 9%. Then we should extend those benefits a little bit longer. You shouldn't just get 26 weeks across the board without considering what the economic climate is. If jobs are plentiful, then we should reduce those weeks. Some states, reduce it to 12 or 16 or whatever it is. But really, unemployment benefits should be at a sliding scale. This is going to save the state money. It's going to reduce fraud. It's going to get people back into the workforce quicker. And it's going to ease the burden on businesses that are paying into that unemployment insurance fund. So that has been a big push that we've been making. And Uh, I think when you explain it, legislators are like, "Well, that makes sense. Of course, your unemployment benefits should be tied to economic indicators." And so that has been something that we've been really pushing for legislators to take a peek at. And so far, I've had some success, and we expect a couple of bills to be introduced in a few states. And we're going to keep making that case to states who don't currently have that. And I will certainly be in your state at some point, speaking with legislators to talk about that this makes sense, especially for a place like Texas, which generally pushes out a pretty good tax policy and regulatory policy. So
And you were saying places like Florida, they already have it. Like Florida is one
they
of
do
this.
already have it. North Carolina already has it. Let's see, I've got a list somewhere here. We've got, yeah, Florida, Georgia, Idaho, North Carolina. Iowa is moving at that in that direction. We are currently working with. I'm based in Wisconsin. We're working with a legislator in Wisconsin to move something very similar, but it's common sense. Economics is economic policy. It makes sense across the board for states to do that.
Right. No, definitely. Because I mean, yeah, because if there are plenty of jobs in that area, then there shouldn't be any reason, to just be staying on that. And then that's causing the employers to have to foot the bill for that too.
Hmm.
And the other part is the workman's comp. Is that something else that you have been taking a look at?
We have not, but we've. It's funny you mentioned that. There have been some legislators who have asked us to, and so I think that we probably will. I think we've been really making this push towards adjusting the UI based on economic indicators. But I agree with you. The way workman's comp is administered in a number of states is not the way it ought to be. And so, yeah, I do think that we're going to take a dive into that because that's the conversation about UI certainly lends itself to let's take a peek at workman's comp and how can we improve that in states. So yeah, it's funny you mentioned that, but yeah, we're gonna take a peek at that at NTU as well.
And so, is there any other initiatives that you're working on right now?
Yeah, well, as I'm sure you're aware, the Tax Cuts Jobs Act has not been renewed and Congress needs to act rather quickly. That would be an absolute nightmare for the taxpayer and for small businesses. If you have an average household income of $80,000, your tax bill would go up by $1,700. And that is significant. I mean, we're in this age of inflation and tariffs, potentially raising the cost of things. That's groceries, that's food on the table for a lot of Americans. And yeah, Congress needs to act on that. And we are I deal with primarily state policy, but we are getting in the ear of state lawmakers who need to be also speaking with their congressmen and senators and that sort of stuff within their state to understand how important it is that we extend TCJA. Because if we don't, it's you're gonna have a lot of people really feeling the pain. I think I was reading the other day that over 26 million small businesses would see their tax rate go up to 43% if yeah, and it's staggering. And of course, when you have that occur, businesses are less likely to hire. They're going to be trying to manage their very already small profit margins, and that's very significant. So we've been talking with a lot of lawmakers in the states to say this has to be a priority. You need to be speaking to your state senators and your state congressmen to make sure that this is extended.
And how much time do we have just for people out there? What's the time limit on this?
I believe it expires, so it would after this year it would expire. Yeah. So beginning 2026 we would see what effectively would amount to the largest tax hike in American history. In one full swoop, yeah.
And that would be definitely, so you're talking about what you would deem as like the middle class. It would affect the middle class segment and then the small businesses.
Oh yeah, yeah, yeah. Like I said, 80, I mean, an average house, if you're making $80,000, I mean, which, nowadays with inflation, it's almost lower middle class. Those people are going to see nearly $2,000 lost. So that's rather significant. So we've been having those conversations with lawmakers just to bring awareness to it. I've been on several different radio shows discussing it in different states. I was in Missouri last week, just making sure that people are aware of it. Primarily, we want your listeners too to start calling their congressmen and their senators and saying, "What are we doing? We need to make sure that this is extended."
Hi, thank you for joining us for another episode of the Business Roundup. If you haven't already, please subscribe or follow us on Instagram or YouTube. Also, feel free to leave comments below on topics you'd like us to cover. Until next time, I'm Melissa Bell.